So hello, everybody. Thank you very much for logging on and taking a quick look at our secured income fund. I wanted to introduce Yarik. Yarik is actually our admin management, and so he'll give you a little background about himself. But this is our secured income fund. We're really geared up to seek investors who are looking for passive income, especially with where the world is going. I think a lot of people are concerned about the unknown. We went into strategy on the design of this fund during the middle of the pandemic. We tied in with our securities attorney and said, hey, no matter who takes the election, no matter what happens in the industry, we really want to be able to hedge against certain risk, what was going to create sustainability for existing investors and create sustainability for Paradyme. And what we've done because of my pedigree has really been in, fix and flip financing post 2008. I've done a little over $1 billion alone just in financing for single family, small balance commercial. And so we really wanted to go into this post-pandemic structure, again, kind of catering to the new world movement and being able to, again, provide passive income to investors that are looking for some security and some stable, so something that's more stable. So that's really what we've done. So again, the CEO of Paradyme, I'm honored to have you guys join us today. And I'm very honored to have Yarik. Yarik has been an absolutely important and component to the management of this particular fund. And we'll just kind of talk a little bit about that here through this webinar. Now, the secured income fund has a couple different components. Again, if we're raising the capital, that capital is going into first trust deed, single family fix and flips. We are able to sell our notes on the secondary, if you will. There's a lot of really cool components to the design of this fund that, in our opinion, creates a little more security for investors going into something that they're looking for, something that's more stable. Right now, our projections is 7.2% passive income per year. It is a paid out quarterly distributions in which we're providing our clients. And this is what we call an evergreen fund. So people can park their capital and possibly pull it back if they need it in a timely fashion. So there's no lockup period, which I think is very important. Just due to, if anything were to happen in the world, investors have their ability to get their hands on their money. So that's really important, and especially for us. So I'm happy to introduce Yarik. Yarik is such an important component for us. Yarik, if you don't mind telling us a little bit about MGO, the firm, and then maybe talk a little bit about yourself as well, please.
Ryan, of course, thank you so much for the warm introductions. Hello, everybody. It's good to be with you today. So as Ryan mentioned, I'm Yarik Kim. I'm a financial accounting advisory partner with MGO, working closely with Ryan and his team. MGO is a national accounting firm. We are one of the top 100 largest accounting firms in the country, with about 13 offices and 400 professionals nationwide, as well as presence in Asia and Latin America. In addition to the traditional suite of services that accounting firms provide, one of our niches for the longest time have been providing financial accounting and advisory services, and specifically fund administration services for private equity and venture capital funds such as Paradyme funds. We have been servicing financial services industry for over 30 years now, and really pioneered some of the best practices in the fund administration space. A little bit about myself. I have been in the financial services arena for over 20 years now, believe it or not, and have been working closely with funds such as Paradyme and other financial services funds in various capacities. So I'm very glad to be partnering with Paradyme to help them obviously achieve a smooth operational success. And we are the official fund administrators for Paradyme, which means that we are really responsible for all of the financial reporting and compliance needs of the funds. We work very closely with Ryan on an ongoing basis and his team to make sure that we are providing this day-to-day operational support, as well as all the financial reporting and the compliance, as well as advisory that Ryan and his team need at this time.
Perfect. Yeah, Yarik, and you nailed it. That's exactly what you guys are able to provide for us. And we're very honored. You've been a huge referral source from our securities attorney, Steve Anapol at Carlton Fields, which obviously was helping us on strategy and the creation of this offering. But just to kind of dive a little further into the lending aspect and how we're kind of getting into the nuts and bolts of your guys' involvement, right? So, for example, let's say, and this is kind of what I wanted to provide some of our investors, is kind of how the day-to-day operation works from an origination side. So we have a small team on the front end. We're doing anywhere between $10 and $15 million in originations a month. We are doing stuff nationwide. Most of our funds, because of our existing track record, has been Southern California, really all over California, but my reputation's been built right here in Southern California. With that, what we're doing is let's say, for example, a borrower comes to us looking for capital. So again, someone who fix and flips properties, maybe looking for a bridge loan for an acquisition of a commercial building, what have you. But let's just use this single family fix and flip as a good talking point. So let's say someone comes to us for the $500,000 purchase price of a home, an existing home. And let's say it's in bad condition. It's older. It was built in the 70s, needs a new roof, whatever the case may be, just needs some upgrades. Our borrower comes to us. Obviously, the borrowers have track records is what we're looking for, good credit. We use Clear as our software for background checks. We're looking at financials. We're looking at, anything about their past, who their contractor is as well. We're really underwriting, making sure that this borrower is really in line with being a good borrower. So that way we don't have to foreclose and take back properties, which is not something we're not afraid of doing if we have to, because sometimes there's more fruit in it for a fund to take back properties, but we'll talk about that here shortly. However, so let's say we have a $500,000 purchase price, the rehab possibly is $100,000, and the exit sales price by utilizing an appraisal or a BPO, a third-party evaluation company, will give us another value. And so let's just say that value is, pick a number, let's say it's $700,000. There's a $100,000 margin, $500,000 purchase price, $1 million rehab, and let's say another $700,000 for exit. They're in it for $600,000, about $100,000 in margin and profit available. So what we do is we go to these borrowers and we say, listen, we want you to come in with just an average of 20% down of that purchase price. So that's a $400,000 net funding at the time of closing at escrow. And then that $100,000 that's needed for rehab or in construction, we'll utilize that and put it into a fund control. Now that fund control is set up where we only release those funds as the construction is going on through the rehab of the property. So let's say there's 4 phases of construction. It's a reimbursement schedule, meaning that each phase has to be completed before we release that $100,000 for rehab in any possible way. So we have to confirm that. We get lien releases. We have a third-party inspector go out and review the property, make sure the material was bought, purchased, and installed, whatever it is, whether it's carpet, countertops, appliances, whatever it is in that phase. We make sure that is all completed by even having pictures and confirming again that phase was completed before we release capital. So let's say, for example, as that's completed, then obviously in between that time, there's a couple different ways we can go. One, if we need liquidity, even during the rehab, we can sell the note, or we can keep this loan on our balance sheet. But where I'm going with this is let's say no matter what the loan is, we're actually having the ability to sell the note before the even construction is being done. So this provides a little bit more security for us. However, this is where MGO comes in and really watches over all of the finances from when we funded it at closing, when we're releasing capital for rehab. They're doing all the calculations for interest, any fees that were made, so on and so forth through the term of that loan, all the way from the beginning to the end of that short-term bridge loan. So that's the way that Paradyme is structured as far as releasing capital during construction, but also what it is we're doing in the meantime. If we need liquidity, we have the ability to sell the note, and we continue to manage the servicing, and we continue to watch over the project and keep the relationship with the borrower so we can lend them money down the road, regardless if we sell that note. So that was just kind of the nature of how we park the investment and park the money and the type of loans that we're providing. Again, what this fund is really ultimately doing. But I want to kind of touch on now what it is that we do on the note sales. So this is probably one of the most important components in my opinion, when I talk to investors to think of. So where's the security instrument, right? How do we make sure that this investment is in essence safe, and how can we, now there's always risk. We always have to disclose there's risk, right? We don't know what tomorrow is going to look like, but this fund is really, if you think about it, a distressed asset fund. We're taking over distressed assets, we're renovating them, we're upgrading them, we're selling them for a profit, or even some borrowers are buying them and renting them out and keeping them as long-term rentals. So we also provide that type of financing inside this fund. However, this is one of the things that we love. So right now, because of the marketplace, there's a tremendous amount of note buyers out there for these type of loans. So just like anybody would go and get a traditional mortgage and they sign on the dotted line with, let's just say, ABC funding, but 2 months later, you get a statement in the mail from Wells Fargo or from B of A. What's happened is they've sold that note from the time they funded your mortgage, and now you get a different letter in the mail saying you got to pay DF lending. So there's a couple different ways that we operate, and what we're doing is while we're underwriting a possible loan, so a scenario comes over, what we're doing is we're taking that scenario and sending it over to a couple of different companies for possibly buying our note. So before we even fund the loan, we have someone already providing us a commitment to buy that note. So here's where it comes in with another important factor. If we fund that loan, the most important thing is that we have the ability to sell the note and obviously recoup our capital to roll this over into more deals. But we keep that loan outstanding with that borrower as long as we can, so the interest is being generated and the borrower is actually the one making that payment. So it's a normal mortgage payment. When we need the liquidity is when we'll come in and say, hey, Yarik, where are we at with capital? Where can we start? Should we sell this note? We have 4 or 5 more loans behind it. And that's when Yarik literally on a daily basis is involved with us and goes, okay, this is the note you can sell. This is the interest that was generated. This is what the profit was made on that. And here's what is owed to the investors. And here's what that balance sheet looks like. So what's happening is he does that on every single loan. So no matter if it's 5 loans a month or 100 loans a month, Yarik and his team is actually doing these numbers on absolutely every single project that we fund, and obviously selling the note as well. So that's one of the things that is so important for us on the front end, to make sure that we're underwriting the right deals, but also having somebody that can watch over the figures on the back end. Again, making sure our investors are getting paid their interest. We're not missing anything in between, from fees and closing and just all the moving pieces that really kind of come along with this particular fund. So with that said, Yarik, are you guys, now will you talk a little bit about your team as well, and then anything else that you would like to add?
Yes, absolutely. I think, Ryan, you summarized it very well for the front office operations and how things and transactions are flowing on a day-to-day basis. So let me supplement that with what's happening on the back end, so to speak, where we come in as your fund administrators. So as you mentioned, obviously, we're making sure on a day-to-day basis that we are providing that additional oversight over the transactions that are happening, whether it's 1 a day, whether it's 50 a day. We provide additional integrity to the numbers that are flowing on the back end to make sure that the items that you discussed, whether it's interest calculations, whether it's payout to the investors, whether it's the loan fees, the management fees, anything that touches the financial reporting and affecting the operations of the entity from the back office, we look at it on a day-to-day basis to make sure that the data that's flowing into the eventual reporting to the investors, which we'll touch on, is obviously clear, and the integrity of those numbers are in place. So that's what we really do on a day-to-day basis to make sure that those numbers are accurate and those numbers land where they need to land. Now,
yeah, absolutely. Keep going. Sorry.
Yep, nope, not at all. So in terms of the financial reporting, right, this is a day-to-day activity that is happening on the back end, which is very crucial, obviously, from our standpoint to support Ryan and his team. But it's equally crucial to be able to provide clear, relevant, and timely reporting to our investors, right? Everybody wants to know where they stand and how the fund is performing. So with that in mind, we provide formal quarterly financial packages to our investors, which really comprise of two pieces. One being the financial statements for the period, which really gives the investors detailed insight, clear look into the fund's holdings, operations, performance, cash flows for a given period. In addition to that, our investors get their individual personalized partner capital statement that tells them where their ending capital is at that point in time and the components of that capital, whether it be capital distributions for the period, capital contributions, and their allocable share of the fund's performance. So at any given point, the investors can clearly see where they stand on an individual basis by looking at their partner capital statement, in addition to be able to have that full visibility into the fund overall operations by looking at the financial statements and seeing all the components and all the activity that transpired for that given period. So we recognize how crucial it is to be able to produce that reporting on a consistent basis. And I'm glad to report that, as we gearing up the operations, we are right on target and are able to meet and exceed the timely delivery of those reporting to our investors.
Yeah, Yarik, you nailed it, and really thank you for that, because you did touch on exactly where I was hoping to go. There is the fund is up and running. We do have proof of concept. We have been paying our investors. We got our first quarter out of the way, and our investors did make their 7.2, which we projected, and we're very happy about that. And our investors and the existing investors are actually one of them actually committed to putting in some additional capital in the beginning of the year. So we're very excited to be able to continue building these relationships. But to kind of summarize this too, and this is where I think is really important for investors to know, is the other type of transparency and how they're going to receive that reporting. So not everybody knows, but we utilize a software called Juniper Square. Juniper Square is really kind of what we call the Cadillac of investor relations and transparency tracking. And so right on our website, investors can go log in onto the very top of our website, and it'll have access to their own portal. And in that portal, we'll have these statements and any and all documents in which you sign regards to the subscription agreement, the PPMs, any supplementals, any adjustments or changes, and all updates, along with our third-party audit that we do every year as well. It's all implemented into our investors' own portal, and they have access to that at their fingertips. We issue all of our K1s through there, and so on and so forth as well. So we feel that this is a great opportunity for any investor that's really looking for something that's stable. We believe the business strategy is right in line with, regardless if the market's doing great, which we'd consider right now as of this date, or even possibly if there's a downturn, we feel that this asset class will probably pick up a little bit as far as the distress market. And any borrowers who have dry powder, which we're tracking a lot of data of how many people do have dry powder waiting for the market to crash, they're going to be looking to leverage and acquire as many properties as they can. And therefore, we believe our fund would actually do well. So we're really trying to establish this brand of vehicle for an investor to participate and feel comfortable that they're involved into something they don't have to oversee all the time. They can bank on that check coming in. And we're really, again, trying to provide that security instrument for investors. And most people really believe in trust deed investments. We're recording this on first trust deed mortgages, and low leverage. So it's a really good opportunity in our opinion. So really that's it. I wanted to make it short and sweet. Yarik, I really appreciate your time. If there's anything else you'd like to add, please do.
The only thing that I wanted to mention to our potential investors and viewers is, as you mentioned, you're using the Cadillac of the financial kind of reporting, which is Juniper Square. I want to mention that similarly, you kind of implemented that Cadillac of financial reporting via the audited financial statements, right? I think it's important to mention that in addition to us being a fund administrator, you took that additional step to really bring in outside independent CPA firm to provide that additional oversight above and beyond of what we typically see for a traditional fund. So the investor is going to get that additional assurance, the highest level of assurance on an annual basis via a nationally recognized top 20 CPA audit firm coming in on an annual basis and auditing the financial results to really give that comfort level and kind of additional, I'm going to say, comfort level really to the
Sure.
investors when they look at the financial statements for the purposes of their own analysis and insight.
Yeah,
So
and
that
you
has been
nailed it.
great.
And that's really what we're catering to, no matter how institutional grade any particular investor may be. I mean, we can talk to any wealth manager, CPA, IRAs, broker dealers, anybody in this space that understands and is really heavy in the space. We can cater to that mindset as well. Obviously, having all of our boxes checked for an institutional grade vehicle, but all the way down to even an investor who hasn't invested into something like this before, but wants to participate and is, again, in retirement mode or needing some cash flow and so forth. Well, actually, one thing that we forgot to mention, which I think is important, is the fact that we have the ability to elect this fund into a real estate investment trust, a REIT, which we plan on doing once we have a significant amount of capital under management. We do feel that that would be a very positive move for investors, obviously having that tax benefit of investing into a REIT. Therefore, only receiving, they're going to be able to retain more income. They're only getting taxed at roughly 80 cents on the dollar on their income. That's really a huge thing that we're getting a lot of, feedback on. People going, well, this is great. I'm getting a great return. We feel that it's secure. We're getting quarterly dividends, which is nice instead of yearly dividends. I have the no lockup period for the capital. It is very institutional grade, and the way you guys are designed. The strategy is proper. We're not just in California. We're looking in other states. We're utilizing third party for valuations. We're doing all the people that borrowers have great track records. We're doing background checks, credit pulls, verification of income. And then obviously because of the nature of our underwriting is what is allowing us to sell these notes to a secondary and to other hedge funds or pension funds that have, that are looking for this asset class. One of the funds, which unfortunately I can't disclose, is typically buying anywhere between $250 million to $300 million a month in notes from operators like ourselves. So very consistent business. And so we're very lucky to have that. But I really appreciate that. You did nail it. We did try to, align ourselves with all of the right, mindseted people with the experience like yourself to come in and help us be successful and provide, again, that oversight, compliance, and protection, the best we can to cater to our investors, because people right now want to make sure they're not going to lose their money and they have the transparency that's important. So we really are relationship based. We do care about our investors. I've been in the space raising capital for many other, even equity offerings, which most people know we have multiple other offerings, but we understand the importance of having the security instruments in place. And so we're very lucky to be in this position at this time, and having the right, people inside our office on the front end. We have about 15 employees that really just watch over this type of fund as well here in our office, separate from you. But, we really feel we're on the right track. So Yarik, thank you again very much for your time. And it was very much appreciated. I thought it would be important for our investors to really see, the two bodies that are really heavily involved on the management level. So thank you so very much. Have a wonderful afternoon, and we'll probably do this again for our investors for updates. So thank you so very much.
Thank you. It's been a pleasure.
Pleasure.